All right, so this is the 6th of June, Monday, the 6th of June, 2022. This is basically what the market has been doing. These are all time highs. You can see that we're in a bit of a downtrend here, and we're kind of respecting some type of level of the 78. So if you take a measurement here, right, we're respecting that 78. So the way that I kind of visualize this type of trading is price is always in some type of web and it's able to react to the 78 in which direction it's heading. Overall, this market is usually and most often going up. Not always the case, and I just watched a video and says, look, it can go down for years, stay in a kind of down trend and not break a new high for years, like 5 to 8 years. But that being said, you just got to be cognizant of the fact that you when you break highs in the downward direction and you fail to break the higher high, then you're still in that selling pattern. You're still selling off. So we hit this 78, we've come down. Now, the way that this trading works is you got to use the most recent set level of 78 to see what's going on. So we're underneath the higher time frame 78. I'm just going to get a new range and we're going to whittle it down. We're going to bring it down till we're at that level that matches this as a 78. So I've got to get rid of this high one. Get rid of that. So you see that this is at the 61. Automatically, my eyes are drawn to this high just here. So I'll bring the candle there, and look, you hit the 78 just on the nose. So what we're saying here is this: price is respecting this high, this level of 78 due to the fact that we're in a sell pattern because price has been moving down. It has reached a critical level, and when it does, it reacts to that. It reacts to that level. If you take a measurement of, well, what is that critical level? It's a 78. That's just how this thing works. So you're constantly in this web of hitting 78 and finding the next 78 below that. And it's not a matter of will it always react? It won't always react. You've just got to wait to see. And you've got to be prepared to say, hey, I'll take the L for going in at that position. So right now, we're seeing price going down. So I'm not afraid to sell this. No problems there. If we push back to another 78, I'll take one here and just wear it. Like, effort. You just take the L and carry on. And the final level to call it off once and for all is up here. And you're thinking, well, this is just rolling the dice and hoping for the best. It kind of is, but the logic's there. You'll know for a fact that price is no longer in a selling pattern once we start to break 1, 2, and 3. And breaking you 4, then any pullbacks down are your opportunity to buy. Right now, we would need to see this 78 and then that disrespect, then my bias will be to the upside. We'll change our minds here. Once we take out that high, create a new 78, stay above a 50 and continue to go down. So let's see what happens here. Pretty sure I did buy in. Okay, so we have to look at this as our targets. The first level of 78, first little area where I expect some type of friction will be there. And I think I'll take one more. And the next one will be here. I'll take one more. And the last one will kind of be here. I'll take one more. All right. So watch what happens. So we're looking to see, will price respect this higher time frame 78? 1, 2, 3. It has so far. 1, 2, 3. Note that there hasn't been any closes above that level. And if we took back the range to show you where our eyes were drawn to before, just here. Still staying, no serious, like meaningful closes above this. So we're good. Okay, a pullback there. So remember, we're just constantly looking to see we're all above the 50. Okay, that's not a good sign. What you can do, if you are really worried, wait for that close above and then go in. But let's see what happens next. That's the first full close above. So here is where you should be changing your bias, but I should change my bias here. So all those small cells are gone. This is that next 78. Let's see what happens here. So we have a new range. We just got to shift our outlook to that. It's still being respected this small. Now it's busted open. So we're selling. We're selling more. I probably get rid of this order. Yeah, I'll stick this through. So okay. So we gotta start stretching the web to see where the 78's at. There's 178 here. Is it respected? First close somewhat. Second close completely. Hey, isn't that a motherfucker? When it catches you like that and you don't know what to do. So we broke that. Stretching the web. Next one. This is another 78. Are we going to respect this one? Possibly. We're late in the afternoon. Okay, that's two candle disrespect. We've come back in. I'm very aware of the fact that price. You tell me, buddy. So I'll take that off the table and watch what happens. Wow, just like that. And that's the whole game. We were going down. Down, down, down. We found the 78 that it wanted to respect. Cool. It got down to a level where it found another 78 to respect. That's fine too. And here we are watching price go back the other way. So we've got to take this, move it over here. And then you see that price is now below the 50. We want to see it stay below the 50, especially when it comes to this first move. If the next move is, it'll hit the 61 and keep going down. See? So, yeah, it has to cross over that 50 for it to be deemed a full move to the upside. So that first initial push failed to get above the 50, and look, I kind of missed the detail here. Look at that, hit the 78. So it's a combination of using the smaller time frame 78s, and you can call them breakers, whatever you want to fucking call them. But this gives you the context of, okay, where do you expect it to stop? A breaker doesn't do that. None of that shit does. You got to see, all right, well, what level of 78 are we looking for? Once we completely go through that 78 on a smaller time frame, like this, once we do that, we hit that higher time frame 78 just here, actually, just so you can see what I'm talking about. Need a bit of pain in the ass. This, sorry, it's like that. And if you zoom out, you'll see that I'm respecting this high here. Oh, sorry, this high here. Yeah, yeah, perfectly. Nice. It hits that 78, respects that 78, and then pushes down. Hits this higher time frame 78. So if we take this range, from here to here, hits that, bang, 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 and then pushes back up. So it fails to hit the 50. If you take the measurement from this lower time frame, that's actually a 78, and then keeps going down, respecting what we're currently in, which is this downtrend. So that's the process of trading. That's how you do it. Like, even though we're it moved up a little bit, we're still trending down. So I anticipate that the next day should continue to move down. So I don't imagine this going up. Let's go to the next day just to prove my point. Because the algorithm, and look, ICT has got a point, sets itself in that way. Like, you can see that all the highs are not being disrespected, especially from the beginning. That high, and you want to see an energetic disrespect. So we get to this 78, you want to see an energetic break of this whole area. This high here was once a 78. You want to see an energetic break of that to continue to go up. Cool. Done. I hope that does help, and you can watch this as many times as you want. And that's how you trade the S&P 500. That's how it works. It's bouncing between 78s to figure out when it's going to go the other way. The smaller ranges need to be broken first. The smaller range 78 needs to be broken first, and you can apply to the next 78 range below it. And that's it.